Why I left my bank for the Vanguard Cash Management account. Most people think their bank is doing them a favor by holding their money. In reality, your bank is likely using your hard-earned cash to profit while giving you pennies in return. I finally reached my breaking point last month. I looked at my monthly statement, saw a 3-cent interest payment, and realized I was being played. I stopped asking why my bank was failing me and started looking for a better way. I moved my money to the Vanguard Cash Management account, and here is why that decision changed how I view personal finance. Start with the fundamental flaw of a traditional checking account. It is a convenience trap. You keep money there because it is easy to spend. It is convenient to have an ATM on every corner. But convenience has a cost. That cost is your yield. The national average interest rate for a savings account sits at roughly 0.45%. Some big banks offer even less. If you have $10,000 sitting in a standard big bank checking account, you are effectively earning zero. Meanwhile, your bank takes that $10,000 and lends it out. They charge interest on car loans, home mortgages, and credit cards. They are profiting off your capital, and they aren't sharing the spoils. When I looked at my Vanguard Cash Management account, the numbers told a different story. As of late 2024, the sweep yield is significantly higher than the national average. It isn't just a few extra cents. It is real, compounding growth on money I need for daily expenses. But it isn't just about the interest rate. It is about the psychology of banking. When your money sits in a checking account at a bank that bombards you with credit card offers, you are being nudged toward debt. Big banks are marketing machines. They want you to spend. They want you to borrow. They make their money when you fail to pay off your balance. Vanguard is different. Their entire business model is built around investor success. They are structured differently than almost any other financial firm. Because they are client-owned, their incentives are aligned with yours. When I moved my money to the Vanguard Cash Management account, I wasn't just switching banks. I was moving my capital into an ecosystem that doesn't view me as a target for predatory lending. Let's talk about the mechanics. How does it actually work? It functions like a brokerage sweep. Your cash is held in a sweep program. It is deposited into accounts at partner banks. Because those deposits are spread across multiple institutions, you get FDIC insurance coverage that effectively scales higher than a single bank account. You get the safety of a bank, but the yields of a high-growth environment. I know what the skeptics say. They argue that you need a brick-and-mortar bank to be safe. They want to walk into a building and talk to a teller. I ask you, when was the last time you actually needed a teller? Digital banking is not the future, it is the present. If you are still paying maintenance fees, you are living in the past. My Vanguard account has no monthly maintenance fees. It has no minimum balance requirements that feel like a punishment for being broke. It is clean. It is efficient. It is exactly what modern finance should look like. Consider the inflation factor. If your money is in a 0% interest account, you are losing value every single day. If inflation is at 3% and your bank is giving you zero, your purchasing power is evaporating. You are working hard for your money, but your money is working against you. Transitioning to Vanguard took me less than 15 minutes. I had to link my external bank, verify a few details, and initiate the transfer. Once the money settled, the yield started accumulating daily. I didn't have to jump through hoops. I didn't have to talk to a manager. I just moved my money to a place where it was treated with respect. Some people worry about the debit card experience. They think a brokerage account might be clunky. I have used my Vanguard debit card for groceries, gas, and travel. It works exactly like the debit card from my old bank. The difference is that the money backing that card is actually doing work for me in the background. Then there is the integration factor. When you have your cash management account, your brokerage account, and your retirement accounts under one roof, you get a clearer picture of your net worth. You stop viewing money in silos. You stop treating spending money and investing money as two entirely different worlds. You begin to see your entire financial life as a unified strategy. I have spoken to friends who are terrified to leave their big bank. They tell me, I have been with them for 10 years. Loyalty is a virtue in relationships, but it is a massive liability in finance. Your bank is not your friend. Your bank is a business. If a business stops providing value, you have a moral obligation to yourself to take your business elsewhere. Think about the big four banks in America. They collectively hold trillions in deposits. They pay out billions in dividends to shareholders. Every time you accept a low interest rate, you are effectively subsidizing those dividends. You are paying for the bank's lavish headquarters and their massive advertising campaigns with your own lost potential. Moving to Vanguard feels like opting out of a broken system. It feels like taking control of the steering wheel. When I see my statement now, I don't see a list of fees and a pathetic interest credit. I see growth. I see a system that understands the value of a dollar. Is it perfect? No system is perfect. You won't find a branch office to walk into. You won't have a personal banker who calls you by your first name. But I don't want a personal banker who's just trying to sell me an insurance product or a high-interest loan. I want a financial platform that executes my instructions accurately and pays me a fair rate for the privilege of holding my money. Let's look at the numbers again. If you have $20,000 sitting in a bank account earning 0.01%, you earn $2 a year. That is $2 for an entire year of holding your capital. If you move that to a high-yield account earning 4.5%, you earn $900. That is the difference between a cup of coffee and a weekend trip. That is the difference between stagnation and progress. Why would anyone choose the $2? Usually, it is because of inertia. It is the effort of changing direct deposits and updating automated payments. I admit there is friction in moving, but that friction is a tax you pay for laziness. Once you clear that hurdle, you never look back. I set up my paycheck direct deposit in a single afternoon. I updated my Netflix and utility bills over the course of a week. It was a small amount of work for a massive, permanent upgrade to my financial life. If you spend 5 hours changing your banking setup to save or earn an extra $1,000 a year, you are essentially paying yourself $200 an hour. That is a wage worth working for. The shift to digital-first financial management is about more than just numbers. It is about mindset. When you realize that your money is a tool, you stop letting it sit idle. You start demanding efficiency. You start looking for friction in every part of your financial life and eliminating it. I stopped looking for excuses to stay with my old bank. I realized that my loyalty was costing me money. I realized that the safety of a massive retail bank was just a marketing slogan to cover up the fact that they were charging me for the privilege of keeping my money there. When I look at the interface of my Vanguard account, I see simplicity. I see clarity. I don't see cluttered ads for credit cards I don't need. I don't see banners trying to upsell me on investment products I hadn't researched. I see my money, and I see it growing. If you are frustrated with your bank, do not wait for them to change. They won't. They have no reason to. They have millions of customers who are just as passive as you were yesterday. Break the cycle. Look at the data. Compare the yields. Read the terms. You will quickly find that the big bank model is a relic of a bygone era. You work too hard to let your money sit in a place that treats it like a burden. Your money should be an engine. It should be working for you while you sleep. It should be compounding while you focus on your career or your family. Ask yourself this. If a friend came to you and said they were keeping their savings in a jar under their mattress, you would tell them they are missing out on growth. How is a big bank account with a 0% interest rate any different? Both are losing the battle against time and inflation. The transition to Vanguard is not just a change of banks. It is an act of financial autonomy. It is the moment you decide that you are no longer willing to settle for the crumbs your bank leaves on the table. Look at your next statement. Look at the interest earned. Ask yourself if that number reflects the value of your labor. If the answer is no, then stop waiting. Move the money. Take back control. Your future self will thank you for the extra thousands you left on the table by simply staying put. We live in an age where information is free and access is democratized. There is no longer an excuse for financial illiteracy or financial passivity. You have the tools. You have the options. The only thing standing between you and a better financial life is the inertia of your own habits. Break those habits. Demand more from your financial institutions. If they won't give it to you, leave. The bank is not your home. It is a utility. And like any utility, if the service is poor and the price is high, you switch providers. It is time to stop subsidizing the inefficiency of legacy banking. It is time to align your money with a firm that works for you. The movement towards smarter, more efficient, and more transparent banking is here. Will you be part of it, or will you stay behind watching your money lose value while someone else gets rich on the interest?